Good morning, everyone watching live on BAM YouTube. Post in the comments, where are you tuning in from? The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's hot sheet, I will cover the drop in housing inventory near all-time low once again, Realtor.com's market trends, how inflation is changing millennials' plans, and what the market needs to recover. Today is Monday, January 23rd, 2023, and the hot sheet starts now. Good morning, and thank you for coming back to the hot sheet. This is week 3 of this massive undertaking we are taking here at BAM to bring this show to you live every single Monday through Friday, that the markets are open, the stock markets, at 9:30, and we're in week 3 here. So here we go. It's going to get real interesting next week when I'm on the road, but we are committed to it. And the biggest support you can give us right now is giving this video a thumbs up and sharing it with one person who wants that quick look at everything they need to know about housing and real estate. So if you could give this video, support it with a thumbs up, support it with a share, we at BAM would really appreciate it. I'm Byron Lazine, and let's jump right in. Number 1 on the agenda: the housing inventory has once again fallen under 1 million homes available. This is again near all-time lows. It obviously happened in 2021 as we went into 2022, the beginning of 22. It was just insane when we saw those 20, 30, 40, 50 offers on one single property almost being commonplace. Since January 1 of this year, a lot of those stories have been creeping up. I don't think the Fed is going to be taking a liking to all of these posts on Twitter and on Facebook of agents saying 15 offers, 20 offers, final and best. But once again, that's happening, and it's because there is absolutely no inventory available for buyers. When you have less than 1 million homes available for, as Housing Wire writes, 330 million people in the country, you are undoubtedly going to have multiple offers on the good inventory, because just because there's 990,000 homes available right now, 970,000 units available, just because there's that many homes available doesn't mean there's that many good homes available or good inventory. Obviously, prices have peaked over 40% the last couple of years, as people probably trying to get rid of a dog mixed into those 970,000 units. So the good homes, the pride of ownership homes, as we like to say in the real estate community, they're going to go flying off, and they're going to have high competition for those homes. So NAR reported that this total housing inventory broke the 1 million mark once again. Existing home sales crashed in 2022 from a peak of around 6.5 million in January down to about 4 million in December. So we're sitting here with, 4 million homes seasonally adjusted rate across the country in terms of sales. Okay. That number is likely to even drop less than 4 million, which we haven't seen that in quite some time. We now have total inventory levels near all-time lows. The most of historical years in U.S. housing market. We just experienced an event that most people never thought could happen. Again, if you're following the hot sheet, and hit the thumbs up if you are, that we need 2 to 2.5 million homes to be what we would consider a normal level of inventory. Historically, that's what we've seen: 2 to 2.25 million homes being available on the market for buyers who want to make purchases. Total housing costs for American homeowners versus their wages are meager, and most will buy a home right away when they sell. Look at housing this way. The last 4 decades, if you look at housing this way, the last 4 decades make sense. What they're talking about here is number of consumers with new foreclosures and bankruptcies in, let's say, what was that, 2006 to 2011. you see that there was an obvious run up on foreclosures and bankruptcies. Okay, you can point to almost any other time from 1982 to 2023. This didn't happen. Okay, so you're not going to see that happen right now. We're not seeing any signs of that happening. So, it's not a point right now where sales are dropping because, people are going into foreclosure and bankruptcy. It's a totally different story. We don't have the inventory to support it. We have an interest rate that just popped up. So, totally different. These comparisons from the past don't hold a lot of water right now. I've been saying it time and time again on Twitter, especially. We have a bigger issue right now as it relates to affordability with inventory than we do interest rates. If we got another 1 million homes onto the market, if we were sitting at 2 million homes of inventory, you would see home prices cool. People thought, okay, 3% to 6% home prices are going to really drop. They cooled, they didn't drop. They cooled, didn't drop. If we see another million homes come on the market, that's where you'll see home prices substantially come down. But until that happens, and until maybe if we saw 8% interest rates, okay, different ball game. But until one of those two things happen, home prices are going to hold firm, especially when you continue to see these stories out there that we're seeing multiple offers again. Once again, from NAR, in this Housing Wire article, we put all of our articles, sources, and show notes in one link below so you guys can download those every single day. From NAR, December was another difficult month for buyers who continue to face limited inventory and high mortgage rates. NAR chief economist Lawrence Yun. However, expect sales to pick up again soon since mortgage rates have markedly declined after peaking late last year. What I'm concerned about is I agree. Home sales are going to pick up. Interest rates dropped. It's seasonal spring buying market. There's a lot of buyers that want to buy regardless of where interest rates are because their life moment right now is I need a home. But what I'm concerned about is the Fed isn't going to like to see home prices potentially pop up in the spring, and they may go back to some real drastic measures. Now, there's optimism that they won't. We're going to talk about that in just a little bit. But if there's absolutely no inventory and everybody's saying, hey, home sales are going to pick up here this spring, what does that tell us is going to happen to prices? Of course, prices will go up in that type of an environment in many markets. Here, existing home sales and recessions are highlighted here. We're seeing that 4 million existing home sales right now, seasonally adjusted number. And if we go to, let me just bring this up another way. Here we go. If we go to this chart, right, and we look at these gray bars, these are recessions. This is the COVID recession here. Some people consider that a recession. Some people don't. Obviously, short-lived. What's interesting is after each one of these recessions, you saw an uptick in existing home sales. Seen one here. Then we did see the double dip. So there could be an argument for that this time. Even in, obviously, COVID, we saw an extreme uptick in home sales. So if we're right now going to be entering a recession, if I put another gray bar right here, you could theoretically say, based on the last four, that we should see an uptick in home sales. Well, if we get this uptick in home sales, if Lawrence Yun from NAR is right, if we happen to see an uptick, if the trends from the last three recessions are right, and we get this uptick in home sales, and we have this little inventory under 1 million homes available, I promise you prices are going to inflate again. And if prices inflate again, I promise you the Fed is going to have to be very bearish in what they do. They're going to have to come out and swing a big stick as it relates to the housing market. That worries me a lot. You can see here from Lance Lambert, this is a Realtor.com source and Fortune chart. The vast majority of the country remains below 2019 inventory levels. This is the 400 largest housing markets in the country. And basically everybody is below 2019, which 2019 was a pretty normal market. So once again, we just don't have the amount of inventory to support the demand that we have right now. Hey, 4 million homes. I'm not saying the demand, is COVID demand, but there is strong demand, and there's strong demand for good median priced homes. And that's why you're seeing all of those price points go a little bit crazy right now. It worries me that the Fed isn't going to decide to cool off. I think that they should, but if they just look at housing, I don't think they're going to be too optimistic about the market cooling prices overall. Okay, Realtor.com just came out with their monthly housing market trends report as of December 2022. Number of homes for sale has increased 54.7% compared to last year. Okay, that might sound contradictory to what we just talked about, but 54.7% off of an all-time low this time last year before spring 2022, when things really got out of control and the Fed started jacking up those rates. It's still an all-time low. We're below 1 million homes. Keep in mind, we need 2 million homes of inventory to get back to what is normal. The total number of unsold homes, including homes that are under contract, has increased by 6% compared to last year. Home sellers are less active this year, with 21% fewer homes being listed for sale compared to last year. The median price of homes for sale has increased about 8.4%, but the rate of price growth has slowed, entering single-digit territory for the first time in 12 months. Homes are spending 67 days on the market, which is 11 days longer last year, but still shorter than before. What I am really worried about here is home sellers are less active than this year, with 21% fewer homes being listed for sale compared to last year. Okay, total inventory is up a little bit last year. We're still near all-time lows. We're below a million. But if at a rate of 21% fewer new listings is coming onto the market, how are we ever going to catch up coming into a spring market where we know there's going to be more demand, where actually mortgage rates are supporting buyers coming out and buying these homes? We really need properties to come onto the market. But as Logan writes in that Housing Wire article that I referenced earlier, people don't sell to become homeless. I've been talking about this since Q1 of 2022. Nobody's going to sell unless they can buy. So this belief out there that people are just going to put their house on the market, people that believe the housing market is going to drop 20, 30% because there's going to be all these homes on the market, show me how that happens with homeowners. What are they going to sell and do what? And do what? So I'm pretty concerned about that. All the great news we had last week, I want to keep it real here. I want to keep it real with what's going on in housing. And I believe that there's going to be a Q1 where if you're a broker, okay, I can pick up on this activity. I don't see a full year. I can't see all the way into 2023 where, yeah, this market looks super healthy in 2023. I want to be cautious about that. I want to have all the data every single day coming in so I can really make an educated decision about my business and help consumers make the decisions that are important to them. When's the right time to list? Obviously, right now, we're looking at no competition, right? So if you're talking to a seller, that should be pretty obvious. Let's look at some of these Realtor.com charts. Active listing count up to 54.7 year over year since December 2022. But how does that compare? Okay, so or in December 2022, rather, it was up 54.7% from a year ago. So here we are basically today, up 54.7% in active listing count. Okay, that's above 2020 and it's above 2021. That's good news. But when we look at three normal markets up here, 17, 18, and 19, or about as normal as you can get comparison to the last 2 years, we are well below those levels. Okay, let's take a look at, excuse me, I'm sorry about that. Total listing count. Okay, so this is the total amount of inventory. We're up 6.6 year over year in December 2022, but we are very close to what was an all-time low of 2021. Here we go. We're about to touch, we're under a million as reported. So this is actually now below that line. And if we keep sinking, we could touch 2021 levels. Even 2022 was far above, or I'm sorry, 2020 here, COVID year, was far above where we sit today. And the three normal markets are well below, above, again, where we sit today in total listing count. Pending listing count. We obviously see far less demand than we did in these outlier years of 2020 and 2021, where demand was totally off the charts. Here we are today, 2022, for pending listing count, still above 2018 and 2017 levels, which I would consider far more normal than what's going on in today's market. We are a little bit under 2019 levels. Okay. Where do we sit for newly listed homes? Here we are, well below any year on history as it relates to new people coming onto the market. Okay. You can't even see it if you're watching on YouTube right now. It is below. You can download this chart in the link below. Let me pop this up. Here it is. Look at how far below that is from 2017, 18, 19, 20, and 21. Newly listed homes, new listings coming onto the market. This is a chart right here that I'm showing every single potential home seller who is considering selling later in the spring. You want to list in May when all the inventory, when all the competition, this is historically no competition. Would you like to play, a pickup basketball game against Michael Jordan, Kobe Bryant, LeBron James, Tim Duncan, and Shaq? Or would you like to go out there from 5 bums from your local YMCA and compete against them? Would you want high levels of competition when you list your home? Or do you want to go out to the market with virtually no competition as a seller? You obviously want virtually no competition. That's the environment that you have right now, coming off of near peak levels for what your home is worth, and in an environment where more buyers are rushing to the market as of January 1, 2023 than they have at any point in the last 6 months. Yeah, for sure. I want to play those those local Y bums. Okay. I don't want to go out against high competition. So this chart here is one that I am absolutely telling every single one of my sellers about, showing them. You can get that in the link below, of course. All right. Median list price right now. Okay. Look at this. We're above 2021. We're above 2020. We're above 19. We're above 18. We're about 17. So does that not make my point that I just talked about? Why would you wait till April or May? You've got no competition and you've got the highest price your house has ever been worth right now. Here we are. This is the time, sellers. Okay. That is something. If I'm an attorney representing an estate and I actually want to add value to the process, this is something. If I'm an agent going out there and advising people when the right time is to list, I'm screaming about it being right now. Okay. Price reduced share. We're starting to see some more of these reductions. 2022, here we are. Okay. Here's 2018 is in orange, blue's 2017, 2019. All right. So we're in the middle, the middle of what I would consider normal markets. We're nowhere close to 2020, 2021. We're seeing some reductions, right? We're seeing some sellers react to wanting to get their home sold maybe even a little bit quicker than they thought, or quicker than they anticipated. And I would say that this is a normal environment. There is a sharp line there, but pretty much normal there. Days on market. Okay. We're starting to see an increase here. We're at the level of 2020. We're back to 2020. We're above 2021, nowhere close to 2017, 18, 19 in terms of days on market. Okay. So that to me is, again, a real positive for anyone who's going to sell their house. Maybe not for a buyer, but if you're a seller, if you're educating people on selling their home right now, these are all things I'd be screaming from the top of my lungs about. in educating my database, educating my consumers as it relates to my market on people that want to sell. Okay. All those trends will be in the link below for daily download. Consider taking a peek at those if you so wish. Millennials, who I believe are making up a large segment of this demand we've seen since January 1st, 92% of them say inflation has altered their home buying plans. But in what way has that happened? Real Estate Witch issued 2023 edition of their Millennial Home Buyer Report, showing some changes in home buying, millennial home buying habits and concern. 92% say inflation has changed. Non-mortgage debt could also delay home buying plans for 80% of millennials. Okay. What are millennials saying? This is on nowbam.com. You can find this article in this summary. With these conditions, 71% say they find home buying stressful and overwhelming. 71% of millennials find this process stressful and overwhelming. Opportunity to address those concerns for every single agent. If you know 7 out of 10 millennial home buyers are saying this process is stressful and overwhelming, should your marketing, should your conversations at least address those concerns up front? They're going to feel like they're being heard. They're going to feel like they have a trusted advisor and somebody who gets what they're going through, and it's going to build trust. I'd address that concern right up front if I'm a real estate agent. 51% say the home search process has even reduced them to tears. So 1 out of 2 millennials says that it is so stressful to buy a home right now, they are crying over it. Opportunity for agents, once again, to be that go-to source and take the pain away. 44% say home shopping has a negative impact on their personal relationships. The stress of trying to find a home. One person wants one thing, the other person wants something else. I want a 3-car garage. I want a fenced-in yard. I really want a bathroom. And then trying to fit all of that into today's budget where prices are inflated, where the money that they're borrowing is inflated based off of a year ago. Yeah, those are going to be stressful conversations. Okay. How has inflation changed millennial home buying plans? 59% are saving more money for a home. 36% are planning to spend more on a home. 28% are delaying their plans to purchase a home. 26% are buying a fixer-upper. 25% plan on buying a smaller home. All great data points for agents to pay attention to for their marketing and just for the conversations they're having with millennials. Millennial worries. 43% worry they'll have to pay for major repairs. 41% of millennials worry about unexpected or hidden costs of home ownership. 39% worry they won't be able to find a home that they can't afford. I really wanted to touch just on those concerns on how it relates to inflation. There's a whole bunch of other data here in this article. I'd encourage you, especially if you are a real estate agent, to go check that out on nowbam.com or on the link below where we have all of our sources. I want to switch over to something that came out in the Wall Street Journal just today on inflation. The market recovery hinges on a quick inflation drop. We're at 6.5%. We got to get to 2% according to the Fed. So how quick will this drop? We saw a 0.1% drop in the CPI last month. We all, a couple of weeks ago, we were all doing the Macarena on here, but we need a really quick drop according to the markets for this really to get us out of an economic potential collapse. Market-based gauges of inflation expectations project the annual pace of rising prices will tumble in the months ahead, roughly as fast as during the recession that followed the 2008 financial crisis, or when Fed Chairman Paul Volcker used double-digit interest rates to crush the soaring inflation of the late 1970s. Hope for a quick return to 2% inflation have encouraged bets that the Federal Reserve will pause and even reverse its interest rate increases this year. Rate increases pummeled stocks and bonds in 2022, and a possible respite has sent both higher in January. Okay, the rally has extended to some of the riskier assets that had stung investors harder since last year, such as Bitcoin and ARK Innovation Traded Fund, which basically is a growth tech fund. Okay, hopes for this quick 2% return have encouraged the Federal Reserve will pause or even reverse its interest rate this year. We're going to see what happens on January 31st if they're going to start to slow this down. We don't know what's going to happen on January 31st, but that'll be a big indicator on how the Fed feels about, is this going to be a sharp decline in inflation? If we take a look at analysts who expect inflation to rapidly cool this year, they point to big fall in energy prices since the summer, as well as easing price increases for food. I don't know if you're buying eggs, you disagree, and some commodities in recent months. But even if inflation declines as fast as traders now predict, stock markets are predicting a fast decline. That still might mean stocks struggle if the economy listens to a recession as inflation falls. Okay. Let's take a look at 3 times in history where inflation just dropped rapidly, which is what some of these projections are pointing to. Okay. We got to go back to the early 1950s. These gray bars right here are recessions. Okay. So let's go back to the 1950s. We see inflation completely plummet during that recession. Okay. Interesting. We see inflation in the 80s here during this recession max out almost at 15. And before the recession really kicks in, maybe similar to what we're experiencing right now, before they officially announce inflation, it starts to drop. And then as the recession takes hold, it rapidly drops. The recession of 2008, okay, we see inflation peak just before recession officially starts, and rapidly inflation starts to come down. We now have seen a spike down in inflation. Okay. We haven't officially called this a recession yet, but if we put a recession line right here, we may follow the same trend that has only happened 3 times in the last 75 years of inflation spiking down significantly. That obviously would be very good news. Let's cross our fingers and hope that happens. A lot of it's going to hinge on what the Fed has to say January 31st, what they believe is coming in the following months. Okay, let's take a quick look at our 10-year. Last week, basically, you could set your watch to it every time the 10-year went up. As it is today, we saw a little jump in mortgage interest rates. Still nothing too significant. We ended the week at 6.15% on Mortgage News Daily's 30-year fixed daily survey, 6.15%. If you look at Thursday and Friday, but the 10-year was up in the morning both days. 10-year being up today, I would anticipate that we will see another small increase, maybe 6.2, maybe 6.21, maybe even 6. Yeah, I would say 6.2, 6.21. That'll be my prediction. I've been pretty close on these predictions, but that'd be my prediction for where the 30-year fix falls. So we've been bouncing in these low 6s. I know a lot of agents have been saying they've been locking people in the high 5s. 5.99 sounds a lot better than low 6s. If you want to go even deeper on some of this stuff, and you know that you really need to have an opinion on the market and you want to unpack the 2023 real estate market, there's a link below. We're doing an exclusive webinar with Keeping Current Matters tomorrow at 3:00. David Childers is going to be on that webinar with myself. He's going to tell you exactly what you need to say in this market, how to unpack it for your clients. So hit the link below. We're doing an exclusive webinar tomorrow, 3:00. With Keeping Current Matters. It will not be on this YouTube channel, or it might be. I don't know about that. Either way, sign up so you don't miss it. That'll be 3:00 tomorrow. Today, 11 a.m., premiering Overask podcast will be Candace Decker, How to Gain Confidence on the Phones. That's today at 11 a.m. on Overask podcast. On Wednesday, we are doing another cold call event at 4 p.m. Eastern. That's under the live tab. If you want to follow that, make sure you're subscribed to this channel. You won't miss any of it. And if you want the slides and the charts and all the sources that we use for the hot sheet every single day. There's one link down below where you can get everything. So make sure you do that. You do have to hit the link right now every single day. We had a little bit of issues with it last week. We're going to correct that, so you don't need to do it every single day. But if you want today's, I'd encourage you to go down the link below and get that. And we'll see you back here tomorrow on the hot sheet live at 9:30. Thank you, guys.